Welcome to weekly view on markets. Nifty consolidated during this week with a small gain of 51 points. Bank Nifty gained 1.15% and closed above 50,000 mark. This is significant for the Bank Nifty as it has crossed psychological level of 50,000 and closed above that. Mid cap and small cap stocks also consolidated during this week. There was RBI MPC committee meeting and RBI has cut interest rate by 25 basis points. This cut has come almost after more than 5 years. That is why it is a significant development. Government's push to consumption in the budget and followed by interest rate cut by RBI will give a good support to the capital markets. Q3 results so far have been disappointing as we have seen margin pressure and lower profits from the companies. Why the company's profits are lower? Because overall demand in the economy has slowed down and inputs cost have gone up. When the interest rates are high, the inputs cost for the companies go up. That is the reason RBI has cut a interest rate, and that is good for the coming companies. The steps taken by government and RBI will have positive effects on the company results in coming quarters, and that will have good support for the capital market. Delhi election results have come and that will have a positive impact on the markets on Monday. Now let us look at performance of indices. Nifty has closed at 23,559 with a gain of 51 points. Bank Nifty has closed at 50,158 with a gain of 571 points. That is a gain of 1.15%. Mid-cap index lost about 103 points and closed at 53,609. Small cap index closed at 17,006 with a small gain of 96 points. India VIX has cooled off. The RBI meeting was another volatility factor in the markets. And once the RBI meeting is over and interest rate has been cut by 25 basis points as expected by the markets, the India VIX has cooled off on Friday and it is at 13.68. Now let us look at various sectors. Healthcare sector has gone up by around 3.12%, pharma sector by 2.98%, media companies, auto companies, consumer durables, metals, private banks all have gone up by more than 2% during this week. NBFCs, manufacturing, information technology all closed with a small gain of up to 1%. Public sector companies lost about 3.76%. Energy sector lost about 3.18%. FMCG sector, after the budget, there was a sharp rally, and at the end of the week, they have corrected by 2.78%. PSU banks corrected by 1.91%. Infrastructure stocks, oil and gas sector stocks lost marginally during this week. So overall, trend was positive and market traded with a positive bias, but it was more of a consolidation. There were no significant gains in the market. Now let us look at technical charts. This is the daily chart of Nifty. Nifty has good support at around 22,800. That is the line which I have drawn. And it has taken support at this level and has gone up. Now last three red candles we can see. So this shows that there is not much strength in the target. If chart has to turn positive, this has to go up and cross the level of 24,200. If Nifty goes up and crosses this 24,200, then the chart structure will become strong. That is where I will have positive view on Nifty. This is the chart of Nifty mid cap index. The overall chart structure looks similar to the Nifty chart. The mid cap index has taken support at around 51,600, and after going up, we see here last three candles slightly dropping. If chart has to turn positive, the Nifty has to go up above 52 to 55,200. Once it crosses these levels, the technical view on Nifty mid cap index will be positive. This is a chart of Nifty small cap index. Small cap index has taken support at 16,000 levels, and now it is at around 17,000 level. It has taken support from here. So it has to cross 18,000. When Nifty small cap index crosses 18,000 level and stays above 18,000 level, chart will have a positive view technically. Bank Nifty has shown lot of strength. As we can see here, this has crossed the crucial this resistance level. It had dropped below this, traded here for almost 2 weeks. Then it has come up, and the Bank Nifty chart looks more positive. It will become further positive if when it crosses this level, that is 51,600 level. Macroeconomic parameters of Indian economy continues to remain quite good. Of course, they have been sluggish for last 3 4 months due to slowing demand and slowing growth. RBI forex reserve is at 630.6 billion. It is up by 1.05 billion during this week. Forex rate is at 87.43. The foreign exchange rate was at 86.5 and it has gone up to 87.5 in last 1 month after Trump taking over. Trump has imposed a trade tariff on several countries. Because of that, all other currencies are weakening against dollar, and similarly, Indian rupee has also weakened. Dollar index is at 108.1. Dollar is strengthening against all other currencies. Brent crude price is at $74.69 per barrel. It was at $76 per barrel previous week. It has come down. Lower crude price is good for Indian economy as we import large quantity of crude oil. Our imports bill will be lower. That will help to conserve our foreign reserves, and also it will help to reduce inflation in our economy. FIIs have sold 8,852.43 crore. Gold price is at 84,900 for 10 grams 24 carat. Gold price has surged due to high demand by various central banks globally, and gold price is at 84,900 for 10 grams 24 carat. FIIs have sold 8,852.43 crore in equity. DIIs have bought 6,449.67 crore. There is a gap between FII selling and DII buying. That is why the market, we are seeing a weak uh, price action during this week. The continued FII selling is a worry for Indian market. Now, because of government budget and RBI action, the FII selling is likely to decrease in coming weeks. If that happens, it will give a boost to the market. RBI has cut interest rates by 0.25%. Present repo rate is at 6.25 from earlier 6.5. It has come down by 25 basis points. RBI has given GDP estimate for FY25 at 6.75 and also stated that inflation is likely to moderate to 4.5% in the coming year. RBI has flagged global uncertainties as a major risk to the Indian economy. RBI has maintained a neutral stance due to the emerging global risks. If they change the policy stance to accommodative, then it could have been much more better for the markets. But because of the global uncertainty, they have maintained the stance as neutral. Markets are likely to consolidate and they have consolidated with a positive bias during this week. Chart structure does not show strength, but at the same time, at lower level, we are seeing buying that is giving support to the market. Market is neither falling sharply nor it is going up, so it is likely to consolidate for some more time till the company's earnings pick up. That may take another quarter or so. So Q3 results of companies are disappointing. Till the company's results become positive and companies profits go up, then only we will see a lot of strength coming in the market, and that may take few more months. So I expect markets will consolidate for few more months or maybe another one quarter. After that, only when companies' earnings picks up, that time we'll see strength in the market. But there is nothing to worry for the long-term investors and also for the mutual fund investors. They should remain invested. Government has taken a lot of action to cut personal income taxes and boost consumption, which will improve the demand in the economy. And the RBI has started cutting interest rates. That also will bring down the cost of capital. All these put together should help companies to improve their results. When companies make more profit, the stock markets will definitely go up. So this is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.